Welcome back to 5 Minute Smart. I am Liam.
And I am Alice. Today is Wednesday, May 13th, 2026, and the global financial landscape is shifting beneath our feet.
That is right. In just 48 hours, Jerome Powell will step down as the chair of the Federal Reserve. His term officially ends this Friday, May 15th, and his successor, Kevin Warsh, has just cleared the final hurdle for confirmation.
It is the end of the Powell era, an era defined by transitory inflation and, more recently, an abundance of patience. But the Warsh era promises to be very different.
Kevin Warsh is known as an inflation hawk. He has historically been critical of the Federal Reserve's massive balance sheet and has often called for more aggressive action against price instability.
And he is taking the wheel at a critical moment. We just saw the Consumer Price Index data yesterday, and it showed headline inflation rising at 0.6% month over month. That is a shock to the system.
Exactly. The market is now bracing for tomorrow's Producer Price Index release. If the producer prices confirm that energy costs are bleeding into every sector, Warsh might start his term with a significant rate hike instead of the cuts everyone was hoping for.
It is a total reversal of the no-landing narrative. Warsh is expected to prioritize currency stability and the long-term health of the dollar, especially as we see the Korean won and other Asian currencies hitting 17-year lows.
There is also the AI paradox. While companies are pouring billions into artificial intelligence infrastructure, the energy required to power these factories is driving up structural inflation. Warsh has mentioned that the Federal Reserve cannot ignore the inflationary side effects of the technological boom.
So we are looking at a Federal Reserve that might be less concerned about stock market drawdowns and more focused on price stability at all costs. This is institutional action, replacing institutional patience.
Wall Street is already reacting. We are seeing a massive rotation out of speculative growth and into what some are calling Warsh-Proof Assets, hard assets in companies with strong cash flow that do not rely on cheap debt.
It is a return to sound money principles. Warsh has often spoken about the need for the Federal Reserve to be more predictable and less reactive to every single data point, focusing instead on the long-term monetary framework.
Which brings us to our signature segment. Alice, what is today's smart-sounding sentence that our listeners can use at lunch or dinner today?
Here it is. The transition from Powell's abundance of patience to the Warsh era signals a pivot from reactive data dependency to a proactive monetary framework focused on the structural flaw of inflation in an AI-driven economy.
That is a powerful one. It perfectly captures the shift from waiting and seeing to taking the lead.
It certainly does. Investors should prepare for a Federal Reserve that is willing to let the market find its level without a safety net.
Thank you, Alice. This is a historic week for global finance. If you found this analysis helpful, please subscribe to our channel for your daily 5-minute deep dive. You can also support our independent research on Ko-fi. The link is in the description. Stay smart, and we will see you tomorrow.